it's Miss Kellie Michele. Welcome back to my channel. So today's video is going to be about inflation. Yes, how inflation is affecting our numbers when you're trying to do rental arbitrage for your midterm rentals or your corporate rentals. So I had a person in my Facebook group send me a message about what he's seeing in his market as far as the margins being very, very slim to do rental arbitrage just because the rental prices have gone up. I have seen the same thing in my market. So I just kind of confirmed with him that yes, this is seems like it's the norm right now until things adjust and inflation goes down. I don't know if rental prices will actually go down, but something has to give here, right? But I've been trying to look for new properties myself to do rental arbitrage, and this is what I'm seeing. So I am going to show you an example of properties that are now for rent in the same condo complex where I have two of my latest properties that I got about 3, 4 months ago. The price I paid for them then versus the price they are now. And let's take a look at the numbers. All right. All right, here we go. Okay, so I have two condos in this complexes or condo association that is located in an area, a specific area here in St. Louis, right? So those condos are 2 bedroom, 1 bathroom condos. I secured them through rental arbitrage about 4 months ago now, right? So the price I paid for the rentals are $1,450. Okay, that's how much I pay for the base rent, which is higher than I normally pay, but because of the location, I'm able to charge more for those particular condos, right? So now, right now, I am on Zillow.com and I am looking for rentals in that same area. And I came across two rentals that are in the same complex, same condos. Okay. So 2 bedroom, 1 bathroom, same complex. And this is what I am seeing. So this one here, they're charging $1,650, $200 more than it was about 4 months ago. Okay. Same complex. All right. This one I see here is $1,530. Not that much of a difference, but it's still at least about close to $75 more, something like that, give or take. Okay. But it's still more than what I paid 4 months ago. So, as you could tell, when you are trying to run your numbers to figure out how much you could charge people and if this will be a good property for you, it's going to make it very, very difficult because now your margins are lower. So, I would not at this time get either one of these properties because it will not give me the profit I am looking for. It's basically not worth my time, right? My minimum base profit that I'm looking for doesn't seem like I'm going to be able to get that here because the rental prices are so high. So, you guys tell me in the comments below, are you seeing the same thing in your market? Okay. Okay, so as you can see, things are getting a little bit tight when it comes to rental arbitrage. Now, just because rental rates are going up, there is potentially a place where we can increase our midterm rental rates. But I'm not sure how effective that's going to be right now. I need to do more research on that. And that's really going to be about testing the market. I don't want to test the market. Like, I don't want to secure a property to test the market to see if I could charge more money. I'd rather see upfront how much I can charge and go from there to make my decision. So I don't like to play those games because I want to make sure I make a certain amount of profit. But because of this inflation and the rental prices going up and making the margins smaller to do rental arbitrage when it comes to midterm rentals, now I am focusing on purchasing properties. So I am now just going to switch and until the market changes now. But I'm going to just switch and focus on finding discounted properties and doing what they call the BRRRR method, which is buy a distressed property, renovate it, rent it out, refinance it. Okay. So that's what BRRRR stands for. I am going to look for properties now in particular areas that I can just basically fix up, refinance, hold on to them, use them as midterm rentals. And then once I get the money back from the refinance, take that money and put it into another property and continue to grow that way. Now, this will cause me to grow at a slower pace, which I do understand that, but I'm also buying properties that already have equity in them. I'm not overbidding, outbidding, or whatever is happening now in the market. I'm not doing that. So I feel comfortable and okay with going this route because I definitely don't feel like it's worth my time to go and do rental arbitrage on a property and only receive like a little amount of money. Like that's pointless to me. So I'd rather just wait and be patient and find the right property that I am looking for to make as much money as possible, because if I own the property, I'm going to make more money anyway. So versus if I rented the property. So there we go. That's just what it is. But in the comments below, I want you guys to tell me in your markets, what are you seeing? Are you seeing the same trends? Are the regular rental prices for long-term rentals increasing, causing it to be more difficult for you to do rental arbitrage in your city, or either the market you're looking to do your midterm rentals in? Let me know. Give me some feedback. I want to hear what you guys have to say about this. So I hope this video was helpful to you guys. Make sure you like and subscribe. Check the description down below for some free resources I provide to you guys. Also, if you're interested in learning about how to start your own midterm rental business, I do have the link below for my online course for you guys. And if you're interested in working with me one-on-one or need a free consultation to determine if you want to work with me, those links are below as well. All right, enjoy the rest of your day. Happy hunting for properties that are reasonably priced, and I'll talk to you later. Bye.